Good morning, everyone, and apologies for the slight delay in starting this morning. I had a small issue with my GoToWebinar. Basically, wouldn't let me in. So, as I said, we do apologise. I had to shut down and start all over again. Great to have you all with us this morning. It's a beautiful day. I'm going to give a weather forecast now. It's an absolutely glorious day down here in Hampshire. And as I said, and I hope it's lovely where you are too. As always, before we start these sessions, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And I can see we have some of our forex students with us, we have some of our quantum users, and I can also see we've got some new visitors to this webinar session. So very quickly, and I'm really going to go over this in a matter of seconds, is I'm going to be running this webinar together with my husband David, who's sitting behind me, and we're going to be looking at the market, the forex market, and the charts through the prism of what we call volume price analysis. We look at price action, and we look to see whether the price action that we are seeing developing on our charts is genuine or not, and we look at that by looking at the volume, the activity, the participation level, and really the best way to explain volume price analysis, or VPA, is for you to see it in action. But that's just one aspect of trading. As you know, we all start with charts. Every new trader coming into this business starts with a chart analysis, but you pretty soon begin to realize that, you know, there are other drivers for the price action, and one of them is the fundamental news. The other is what we call the related markets, and more given what's been happening over, well, certainly these last few months, these last few years, we also have to look at the political side of things. And when it comes to the euro, that is very much what you have to factor into your knowledge base, as it were. And we've had a fantastic example over this weekend with the EU summit. And I'm just going to explain that a little bit more, because, you know, there's this wonderful agreement that they've all, you know, they've spent 4 days locked up, poor dears, you know, in the basement somewhere in Brussels, and they've managed to stagger out into the light of day, blinking like little moles, saying, you know, waving a piece of paper saying, we've come to an agreement. Oh yes, well, and guess what? The euro's been selling off, and you think, oh my goodness, how can that happen? I'll explain what you have to understand about the euro and what makes it tick, and what is what to look out for the day that it may come, it may not come, when the euro is really under severe existential, you know, the existential threat, as it were. Right, so that's that. What we've also done is, I mentioned earlier, we have our quantum users. These are traders who have invested in our indicators and tools and software. We've developed some very specific ones for the forex market that basically help us to track the flows very quickly and in an instant into both individual currencies and currency pairs. And it's really nice to see when we look at the at these indicators this morning. There's actually been some really nice moves, and looking up and setting up for perhaps some decent reversals, particularly as we come now to the start of the London session. So I'm just going to take that down very quickly, and here we are. This is one of my favorite commentators out there. His name is Mish Shedlock, and I really do urge you to go and scope him out, and you know, put him, if you've got a Twitter feed, put him on your Twitter feed. He was actually telling everyone before the UK election that you know, he'd crunched the numbers, and he was saying that there would be a majority for the current government, although he kind of underestimated the size of that majority. So I have a lot of respect for him. He's a real data geek, and his commentary is well worth reading. And basically, his headline says it all: surprise not, EU reaches fist banging deal. To do with the euro, and as I said, the euro is going down. I've actually got the euro Aussie, which I'll be looking at in a second. But just very quickly, about the euro. And we can see here on the currency strength indicator, if I just take off all the currencies, this is the first indicator that we look at that tells us where the flow has been going into which currencies, and you can stat it on and off. And as we can see here, this is the euro. It's been going up nicely, but it's had a fall. It tried to rise, and then it's going lower again. And you say, well, how can that happen? Because they've reached this this amazing deal. I mean, basically the deal is it's a recovery plan in the wake of the coronavirus, and it's to help countries that have perhaps suffered more than others, including obviously Italy, Spain, I mean Greece as well. And the dispute was whether it's going to be a grant, whether it's going to be a loan, and you know, yada yada yada. And anyway, and apparently they've been all locked up in Brussels, you know, hammering out a deal. And you've probably seen the headlines saying, you know, what they call who they call the frugal four, including Holland, Finland, the more you know, countries that don't have a lot of debt. Saying no, we can't just, you know, throw more money at this. So, you know, these feckless Southerners, as an Italian, I can say that. You know, really, you know, you can't just write them an open check. They've got to be conditions. It's got to be a loan, and etc. 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 Anyway, guess what? They've all come to an agreement. And you think, well, you know, why is the euro fallen? It's you know, it's most wonderful news. And as I said a couple of sessions ago, and I think I repeated last week, you have to see the euro, first of all, through the prism of politics. So if you're a euro trader, you have to you look at the charts, you look at your fundamental news, you look at sentiment in the market, but you really have to understand what drives the euro is politics. And what also drives the euro is what is actually happening in the bond market, because every time the euro has had an issue, has come to a point of crisis, genuine crisis, is when when the bond market has spoken. The bond market of all the capital markets is the most powerful of all the markets. It's the one that, you know, you know, that can pull whole countries and economies back into line. And if the bond market starts to speak, in other words, the yield starts to rise, and in particular the spread, and here we're talking about the spread is the difference in borrowing costs between Germany and Italy. Italy is, if you like, the Achilles heel of the European project. The last time there was an issue with the euro, a serious issue, is when the Italian spreads just, you know, started to get out of control, partly because of politics. There's all this, you know, Italy occasionally comes up and says, oh, we don't want to be part of the euro anymore, because it hasn't benefited to the extent, certainly, of Germany. When Italy was out of the euro, the way the Italians dealt with any economic issues, they simply devalued the lira. You know, as I said, I mentioned earlier, you know, you would be a lira millionaire. I think 450 quid would net you a million lira. They don't have that facility anymore. They're in this club, they're in this currency union, which is a union, but it is not a complete union, because it is not underpinned with, it's not a debt union. Each country is actually responsible for its debt, and it's one of the reasons why the euro cannot succeed very long term unless all the countries pool their sovereignty and their debts. Now, the Germans, naturally, who don't have any debt, are not terribly happy about that. So if you want to see what the market thinks about the euro, you have to look at the bond market, and in particular the spread between the borrowing costs in Germany and the borrowing costs in Italy. And when that spread goes out of kilter, as it did, we see here when Lagarde she misspoke. She clearly hadn't been, given, she's reading from the wrong script, basically. If you remember back in March when the ECB meeting came and she said, the ECB wasn't responsible for the spread, then all hell was let loose, and she then had to row back. It was a communication mishap. So if you want to know whether the euro is going to survive ultimately, and what is really driving it, it's politics. That politics is also reflected in the bond market. The fate of the euro is in the bond market, and at the moment, not the weak, I mean, the euro is only as strong as its weakest link. The weakest link at the moment is considered to be Italy. So you really have to look at the politics, keep up to date with what the Italians are up to. They, we constantly jumping up and down saying, complaining about this, that, and the other. But so far, the Italians have always fallen into line because the euro project, there is so much invested in the euro project. So as I said, if you are a euro trader, you like to trade euro dollar, and I know a lot of traders do, you always have to have half an eye of what is going on the political landscape, and particularly at the moment, what is happening in Italy, and whether they are going to throw a grenade into this project. And as I said, Lagarde bond spread, particularly between the German Bund and Italian bonds. The German Bund is like the gold standard, if you like. It's like a treasury, which is why yields are negative at the moment. So all the headlines that you read about the euro at the moment, you think, oh, they reach a landmark drill, oh, it's absolutely wonderful, etc. That's all window dressing. What you have to watch is you have to watch what the bond market is saying. And also the other place to consider is also the futures market, the CFTC. The euro longs have actually crept up this week. So there's a bit of cognitive dissonance when you have to trade the euro. Because on the one hand, you will see these quite dramatic headlines, fist thumping, Macron getting all, telling, thumping the table, and there's all this theatrical show around the euro. And then when you, on the other hand, you find, the euro longs are increasing at the CFTC. There is a disconnect between the two. But as long as you remember that it is a political currency, that is the bond market that will really determine if the currency can succeed in its present format. You have to have debt union. It's all very well coming along with this plan, whether you call it a grant, whether you call it a loan, whether you call it whatever you like to call it. At the end of the day, if it's to succeed long term, all of the European countries have to be on the hook for what each individual country has to spend. And when you have what is, you have this divergence in approach to, spending, public spending, where you've heard the frugal four, Finland, Holland, who are always very prudent. Germany, they run a surplus, and what is considered, perhaps they consider to be, in inverted commas, the feckless South. You have this tension within this union. You are going to get more and more of these situations. But in defense of the feckless South, when they had their own currency, they could do what they like. They simply devalued. And I've got a chart somewhere which says that since the inception of the euro, the country that has benefited the most from it is Germany. And it's not a pop at Germany, it's just what it is. The Deutschmark was hugely strong. The euro has allowed them to, they have, their exports are competitive, and they are what they are, and things in Italy are what they are. So lots of tensions underneath it, underneath the euro, political tensions. You've got to be aware of it. It's a political currency. Watch the bond market. It's the most powerful market of all the capital markets. They will ultimately determine whether the currency survives or not. So that's my little homily on the euro. We've moved into the London Open. A quick look at where the currencies are. A good mood this morning. The Nasdaq was up over, was it over 300 yesterday, David? Amazing. No, much as that, 100? Anyway, it's back over the 11,000 a key point that I mentioned a couple of weeks ago. We know the market is in a good mood. Why? Because, you know, the yen pairs are all being bought. In other words, the yen is being sold. It is reaching a point of exhaustion. This is on the hourly chart. This indicator, the CSI, tracks the flows into the individual currencies. The matrix then takes that data and tells us which are the strongest and weakest of the currencies, although the yen pairs, there's not consistency. We've got the Aussie yen at the top. The numbers aren't a lot to write about. The numbers on the matrix also tell us whether it's strong buying or strong selling. And by the way, there is an upgrade coming to this indicator whereby that number that you see at the top and the bottom, we've given it a rating so that to be able to give us an indication of whether that's a high or medium or low number, to give us a feel for the kind of momentum and that's been behind that move. The array which we see here tells us again, this is on the trend, if you like, and obviously the Aussie yen is at the top. It's certainly not at an extreme at the moment, but you know, it just gives us a quick snapshot. What's been going on, what is going on, what is likely to be turning, and you know, this is even before you have to look at an individual chart, and certainly, you know, you don't have to look at the 28 charts for all the pairs simultaneously. It just gives you a quick intro. And also, if you are a trader that is looking for just a trading opportunity, maybe as a reversal, or possibly hoping to get into a position where maybe a move is underway, which we do when the lines cross, certainly on the CSI, it gives you an instant heads up and says, hey, go and have a look. Perhaps the Aussie yen, as we see here, is very, very overextended, and the yen is down here. This is the hourly chart, so we'd look at maybe the faster time frames. And have we got a cross on anything at the moment? Where we possibly had a little cross on the euro dollar. Maybe the euro is now benefiting from the good, in inverted, news about from the EU summit. So these indicators give, as I said, they give you so much information before you even have to look at a chart. You also use it if you are euro dollar trader, for example. You know, it tells you when the lines are moving in the same direction. It gives you a heads up of the type of price action that you can possibly expect on the pair that you are trading. I'm very much focused on the British pound at the moment. Although having said that, I have got some positions on Euro Aussie at the moment, so I'll go and have a look at those. And one that's quite interesting at the moment to me is I've just seen this divergence on the pound Canadian. The Canadian certainly has a bit of a way to go, and although the pound is looking overbought, as we see here, you have to remember currencies can stay overbought and oversold a lot longer than you and I can stay solvent. In fact, all markets can. So maybe I might go and have a little look at the Euro Canadian. Certainly there's been a nice move on the pound yen, possibly maybe coming up to a reversal on that. So the indicators tell us so much about what is happening on the charts. But as always, let's go and see what is happening on the charts, and I'll pass over to David.